Hey everybody, welcome to our webinar today. My name is Catherine Ring. I'm the VP of Marketing here at ZSuite Tech, and we are very excited to talk to you today about commercial escrow and our platform, ZEscrow. Just a couple of housekeeping notes before you get started. This platform does work the best in Google Chrome, although it does work fine in Safari as well and Firefox. So if you are having any problems from a browser perspective or from a technical perspective, I would suggest restarting the browser or switching to Chrome. If you have any questions along the way, I will be online to answer them behind the scenes. And Nathan, who you will meet in just a second, is a great presenter and great at answering questions. We welcome them at any time. There will be a recording of this presentation that will go out to you immediately after the session closes, and you will have access to a transcript as well if you're interested in that. So welcome to the webinar. We are ZSuite Tech. We're going to be talking about what is commercial escrow. And to really dive into that conversation, I'm going to turn it over to Nathan Baumeister, who is our CEO and co-founder, and is going to be telling you all the good news today. So Nathan, take it away.
Awesome. Thank you so much, Catherine. And thank you all for attending our webinar today. I'm always excited about, talking about what we do here at ZSuite Tech. And as we do so, putting everything in context, I think it's fair to say that across the banking industry in the last 18 months, there's been a significant change or a significant difference in what everyone is focusing on. In many ways, it's almost a 180-degree turn. You go back 18 months ago, Fed funds was near zero. There were so many deposits that most banks didn't even know what to do with them. In fact, some were turning away deposits because they didn't want to put it in the investment portfolio because it couldn't yield a high enough yield to keep your net interest margins where you wanted them to be. You fast forward to now, Fed funds is over 5%. So many deposits have left the U.S. financial institution system. Many people are looking for ways to be able to fund their balance sheet, and the cost of those deposits have completely changed. Most of you all have probably been in banking enough to know that these things are cyclical, right? Everything ebbs and flows. And so going back to 2019, when we first started ZSuite Tech, we actually spun out from a bank in the Massachusetts area called Leader Bank. In the summer of 2019, we had this idea of having special products and offerings to help grow deposits in specialty categories. And boy, am I glad that we started in 2019, so we would be prepared, in 2023 to be able to help out in an even more significant way as deposits have come kind of really front and center of what so many banks are focusing on. As banks are looking to grow deposits, there's a lot of, there's very few, plays in the playbook, right? You could go with consumers. You try and get their checking accounts and savings accounts. You get a whole bunch of them, they keep small balances, but there sure are a lot of them. So, and it's low cost. You could go the other retail side where you're looking for those that have higher deposits, looking for what they want to keep liquid, and offering the best rate to be able to get them to come in through CD specials, money markets, those types of things. On the commercial side, obviously, there's the general purpose, just, hey, let's get an operating account. Let's try and create relationships with specific businesses. However, when you go onto the commercial side, as you all know, things start to get a little bit more complicated because businesses have so many different needs. So the way that we are focusing on to help banks through the United States to gather deposits is clearly in offering technologies and services that help you to grow specialty deposits. Now, there are a lot of different types of specialty deposits. So the specific area that we focus on is in commercial escrow. This includes escrow accounts, trust accounts, sub-accounts, FBO accounts, custodial accounts. There's a lot of names for them, but this is a really unique opportunity that we've uncovered as we've worked with many different banks across the United States. We're up to 66 now. But there's trillions of dollars of deposits that are sitting in these commercial escrow and sub accounts. And there's very, very few banks who A, know about these, and B, are willing to service them. And so what we want to talk about today is just sharing with you kind of what is this opportunity within the specialty deposit space of commercial escrow. We're not going to, be able to go through every single example because there's so many of them. But more than anything else, we want to provide a framework so you can think about what opportunities may exist within your bank already or in your marketplace, and then go into some specific examples to take that framework and that theory and kind of breathe life into it. So when we talk about commercial escrow and sub accounts that we can help banks gather, there's two broad categories that we really focus on where we can make a difference. The first one is going to be what we term as three-party accounts. And these three-party accounts are going to be ones where you find that that there are more than one party associated with it. And I apologize. I was having a hard time getting the buttons to work here on this side for PowerPoint. But on the three-party accounts, they're different than your typical accounts on the commercial side, because in the commercial side, you have the financial institution and you have the company, and the company owns the money, are the signers of the money, and that's it, right? They're just there are two parties that are involved. Once you add this third party, it starts to get complicated. So the third party would be some sort of customer of the company. The classic example is, of course, on the escrow side. You could talk about perhaps a law firm. A law firm is holding money for and on behalf of one of their clients because there's a hold on it for some reason. Maybe it's a settlement that's not going to be paid out. Another example might be security deposits from a tenant perspective. The landlord is holding the money, but it's actually the customer's money. The reason that there's complications in this are twofold. First, from your typical technology stack, from a banking technology perspective, the hierarchy, the data infrastructure isn't really built to extend to a third party, right? So you have the company who is the signer on the accounts. They're the ones that are managing the money, but the actual ownership of the money belongs to this customer. So you have these other parties. It breaks a lot of the data hierarchies within the classical systems. The second one is going to be, this is a very fun place that legislators love to dive into, because they feel like in these cases, the company is a powerful entity that is managing a less powerful entity, the consumer's money. Therefore, there needs to be legislation that is tied around these types of accounts to protect them. Now, it would be really cool if there was just like a three-party account, federal regulations on how these things are dealt with. Unfortunately, that's not how it works. The legislative burden that falls into the three-party accounts varies based off of industry. It also varies whether it's on the federal level, the state level, or the local level. And in some cases, you actually have different laws and regulations passed at the federal, state, and local level. And your commercial customer needs to be aware of those things and fulfill the requirements from that perspective. But that causes a lot of pain points, manual processes, a lot of those types of things that make it where it's difficult to be able to manage these. So that's the first general framework for the use cases to be looking at when we're talking about commercial and escrow and sub-accounting. The second one is going to be in subledger accounts. So these are basically, if you just think of a commercial customer, they have a pool of money, and for whatever reason, they want to subdivide it into smaller pools of money to be able to keep track of them for multiple different reasons. We have an example here as a municipality. Say they have $800,000, but these $800,000 are actually different chunks of money that have already been earmarked for specific purposes. And so the municipality, though they don't want to open up a bunch of different accounts, they would like to ring fence certain dollars to provide the accountability to, hey, this money is set aside for these purposes. And oftentimes when you see these types of needs coming up, it's because they have to then provide like some sort of reporting to their bosses, in the municipality perspective, perhaps to the city council or whatever else it might be. So these are the two big broad use cases that we find within commercial escrow and subaccounting. When you start to look at what types of commercial businesses use either three-party accounts or subledger accounts, or in some cases, a combination of both of them, what's kind of fun is you get a list of the who's who of some of the best commercial banking segments that exist in the United States. Landlords, property managers, title companies, law firms, municipalities, 1031 exchanges, real estate offices, nursing homes, nonprofits, funeral homes, and this definitely isn't an exhaustive list. But all of these clients, first and foremost, are using some aspect of escrow or subaccounting to run their business on a day-to-day basis. Secondarily, they also often have multiple banking needs outside of just the commercial escrow and subaccounting. They have other deposits that they are holding. They also have a lot of lending needs. Oftentimes, they have very complex needs on the cash management side, which can drive non-interest income. So as we talk about helping with digital escrow and subaccounting, it's not just about getting the deposits that fall under that particular category, but rather how can you build out relationships with these types of commercial customers that go beyond just that. So at this point, we have talked like a high level, kind of the framework that exists for the different use cases. And I'm sure that's helpful, but if you're anything like me, it's always nice to put some flesh on the bones, if you will, or some detail on that framework so that I can internalize a little bit more. What is it that we're actually talking about? Especially if commercial escrow and subaccounting is a new category for you or for your bank. So what we'd like to do is just share a couple stories of some of the banks as well as the commercial customers that we work with, why they're using ZEscrow, why is it that it's complicated, and what type of results our banks have been able to see. So the first one I want to jump into are 1031 exchanges. For any of you that aren't familiar, there's a specific code in the IRS that allows for 1031 exchanges. What this means is if you if you sell a property that is used for commercial reasons, you could take the gains from the sale of the property, put it in a 1031 exchange, and use those funds to buy a like property within a certain time frame. And if you do those things, then you will not be taxed on the gain of the sale of that property, right? So there's this IRS code that talks about it. There's very specific rules that need to be followed so that the 1031 exchange does come to fruition and they don't get taxed on it. One of the things that it requires is it requires you to put that money with a qualified intermediary or 1031 accommodator. So there's actually a person, it could be a business that acts as, like I said, it's an accommodator or qualified intermediary that holds those funds and helps to manage the exchange and ensure that it follows the rules as set out by the IRS. Now, from a banking perspective, there's two ways to be able to go to market in this particular space. The first one is a bank can create a subsidiary where they act as the qualified intermediary or accommodator. That means that then the bank would be going out looking for folks that are selling different properties and selling their services as an accommodator. There's some nice non-interest income that comes with that, as well as the float on the deposits as they're sitting with the bank. So that's one go-to-market strategy. Another go-to-market strategy would be that you just look to bank qualified intermediaries that are out there. In that case, you would be looking for these accommodators, these qualified intermediaries. They would keep the deposits or the escrow accounts they're doing for each one of their exchanges at the bank. This is a nice way to be able to get more deposits because you're not playing man-to-man coverage. You get one qualified intermediary and you get all of the deposits that are within that book of business. However, obviously that means that the qualified intermediary is going to keep what that non-interest income would be, as well as you would be, sharing some of that interest float that you got if you were holding the deposits with that accommodator. We've seen banks be successful in both ways, but just to share one story, there's a Encore Bank. It's a bank that we work with. There are multiple different states across the United States. And they decided this was a category that they wanted to go after. The chosen market strategy for them was to look for qualified intermediaries because they were looking for big chunks of deposits, and therefore having aggregators doing this, and then instead of them just doing it themselves, was a big focus of theirs. The first thing they did is they learned about all the different rules. They had to be in separate accounts. Typically, you need to have the ability to split interest in between both the accommodator as well as the person that you're doing the exchange for. There's certain timeline requirements that goes with all those types of things. Spent a couple months diving into how exchanges work, what the rules are, and how they could be the best bank for these qualified intermediaries. This was inclusive of making sure that the ZScrow platform, which is our platform that they license, would be ready to go to market. And what was great is as soon as they pulled the trigger, they were very quickly able to get a couple wins, and within just a few months, they were able to onboard 2 different qualified intermediaries with over $10 million in deposits in less than 2 months. And therefore, they were able to very quickly grow those deposits they were managing and start funding their balance sheet with them. And it was fun to be able to hear directly from one of the 1031 qualified intermediaries that we talked about. It says, "I love the system's ease of use, navigation, and convenience of doing online wires natively through the portal." Right. So this is one example of a use case where the bank could go to market to get these types of specialty deposits. Now let's go to another one: property managers. Property managers just have, and this includes landlords as well. They have lots of banking needs, which is awesome. Obviously they're lending money to either buy or build facilities. They need lines of credit to be able to run the business, and then they also have a lot of depository needs. One of the biggest use cases that we find from a commercial escrow and subaccounting standpoint is with security deposits. Now, security deposits are an interesting animal because there are state-by-state rules, and in fact, there are several local jurisdictions that have their own rules as well. So depending on which state you are, you might find that there are a different burden that's created for a property manager to manage these. But just to share this one story, we work with a bank out in New England. It's in the state of Massachusetts. And the state of Massachusetts has some very, very specific rules that a property manager needs to follow. And I'll just give you some of them. Every single security deposit needs to be in their own separate account. Within the first 30 days of opening up a security deposit account, you need to send a notification to the tenant that includes the account number and the bank where it's being held. It has to be an interest-bearing account, and all of the interest needs to go to the tenant, which means they also need to get a W-9 or W-8 form for those purposes to make sure to take care of the 1099 INT forms. The interest cannot stay in the account until it is closed. It needs to be dispersed on an annual basis, right? So there's just all of this complexity that exists that property managers there have to follow. And the kicker, at least in Massachusetts, if you miss out on any one of these requirements, you owe 3 times the security deposit amount to your tenant, right? It's a very burdensome thing that property managers have to do. Luckily, through the ZScrow platform, we automate all of those things from a compliance perspective, which allows banks to go out to landlords and property managers and say, hey, I can really help you with this. So this one particular bank that we were working with, they have a commercial banker. Her name's Michelle, and she had been pursuing a gentleman named Elias for multiple years. He had an auto body shop. And so she'd built a relationship over time, but never had been able to get him to move banks. However, Michelle did uncover that he had been reinvesting his properties and he'd been reinvesting the profits from his auto body shop into buying properties for rentals. And it ended up at this point in time, he had 20 different buildings with multiple units in each building, and therefore was spending a whole bunch of his time actually managing this business. So she invited us to join her as talking to Elias to share what we could do to help automate some of those things on a security deposit side, as well as some of the other offerings that the bank has. After the conversation, Elias was like, I'm in. We're like, oh, cool. So you'll use this to manage security deposits? He's like, no, I'm in. Like, I'm going to move everything over to this bank. Michelle, of course, was super excited. He pulled out his checkbook. He started writing out a check for $100,000. He's like, is $100,000 a good enough deposit to get started with? Of course, Michelle's like, yeah, of course. But my favorite part of the story came as we were walking out. So we were walking out, and Elias said, hold on just a second. I've been thinking about refinancing many of my properties. Is that something you could help with? Of course, Michelle said, yeah, we'd be happy to talk about that. About a year later, I actually called Michelle up and asked how Elias was doing. He's like, oh, it's great. He did bring all of his deposits for both the auto body shop as well as for all the properties that he managed. And I said, well, what about the refinancing? He said, we have half of his buildings. We now have the loan and we were able to do the refinancing from. So just a fantastic story on another use case that kind of can be brought to mind. There's other use cases within the property manager space, but that was the big one I wanted to dive into there. Now let's jump to another example. Like I said, I'm just sharing different stories to help bring to life some of the actual use cases that our platform is being used for, and that our banks are able to be growing their deposits in the commercial side. Nursing homes. So nursing homes are really, really interesting. There's different types of nursing homes. The two that want to focus on, at least for the purposes of today, are going to be in memory care facilities as well as assisted living facilities. So when you have folks using memory care facilities and assisted living facilities, oftentimes they are not able to manage their own money. And so the nursing home actually has custodial accounts that are opened up for the benefit of and in the name of the resident. But the resident isn't a signer on the account, the nursing home is. As you can imagine, there are a lot of regulations on top of this because we want, I personally want to, and legislators have agreed, we want to make sure that there is not anything nefarious going on with these nursing homes as they're managing their residents' money. And so there's very specific rules of keeping accounting separated for each of these custodial accounts, having a very direct line of accountability in reporting for the funds and the uses thereof. And as you can imagine, the Social Security Administration is heavily involved with this because oftentimes the money that's going into the custodial account is coming from the Social Security Administration. There are specific rules on, and they're actually built into the ACH files, NACHA file formats, where you can enroll residents to particular nursing homes and de-enroll them. And then there are specific clauses where the Social Security Administration could actually come in and audit the books and have enforcement action on nursing homes to make sure that all this reporting is there. And there's requirements of things that need to be sent to government agencies on a reporting day-to-day basis. Right. So a lot of needs here, a lot of complication, but in the end, it comes down to managing escrow accounts, transactions going in and out, and making sure that there is a clear line of reporting and demarcation of the ownership of the funds and where the split is between all of those types of things. This also includes some interest splits and different transactions from there as well. So one bank had been banking this sector for quite a while. And they had built up their own internal software to manage it. But even with that internal software, there was just massive amounts of manual effort and labor that had to go in to provide these types of banking services. So much so that they actually stopped offering the product and offering those services to take on new customers because it just became too burdensome. Luckily, we were able to get together and we started talking about our ZEscrow platform. We started talking about what they're doing in-house, and we found that there was good marrying of moving those over to the ZEscrow platform to be able to help automate a lot of those manual processes and make it much more straightforward to not just manage the 18,000 sub-accounts that they're currently managing on their own in-house built software, but now they're going to be able to go ahead and start building out that business once again because they have found a way to be able to do so with much less operating expense by using the automation and the platform that we're able to build together. So a great use case there in building that out. We have two more stories that I'll go through. We'll go a little bit quicker at this point. The next one is going to be from a municipality perspective. We found there are so many different use cases when it comes to the government and to municipalities with both escrow accounts as well as trust accounts, as well as sub accounts. We mentioned one at the top when I gave you the example for the sub ledger. Oftentimes municipalities do need to or want to, ring fence specific funds when they have approval to spend it on, a new fire department or certain fire engines or ambulances or whatnot. And in that case, they they oftentimes need the reporting and the statements down to the sub-account level to provide that then to their bosses or to the legislators that they report back to. In some cases, it's interesting. There's one municipality that actually wants to, they assign a trustee over specific funds that have been set aside, and they want to provide visibility to that trustee so that they could see that the balances are there, the transactions are there, and been able to do that through digital access through the ZScrow platform. But in other cases, they're holding funds on behalf of other individuals. For example, surety bonds. I know there's different flavors of surety bonds, but just an example, they have a big contractor. Let's say it's going to be $1 million contract. They're going to ask that contractor to put a certain amount of that $1 million aside, so that in case anything goes wrong, it's there. And then there are specific rules on how they manage those funds. We've seen various different types of FEMA accounts, custodial accounts, property tax accounts. We've even seen police seizing of funds, right? So if they are seizing funds from any criminal activity, they need to set that aside and ring fence it. There's one particular use case that we found that still baffles me to this day, but there's a municipality that actually, there's a rule that depending on the average balance, it's $5,000. If the average balance is less than $5,000, the beneficiary on that escrow account is only supposed to receive a statement on an annual basis. However, if it's more than $5,000, they actually need to receive a statement on a monthly basis. And the interest rates on the amount that they earn actually change as well. It's just very, very interesting, the complexity that exists within this particular space. So a lot of use cases that that we've seen from a municipality perspective. The last one I'm going to touch on is in the healthcare field. So the specific use case that I wanted to share here is that oftentimes when there are insurance settlements paid out, depending on the type of insurance, like for workers' comp, and there's a couple other examples, those funds can only be used for medical expenses. And since those funds can only be used for medical expenses, they don't give the money to the end consumer. Because if they give the money to the end consumer, then that end consumer could use it for whatever they want. So there's these third-party administrators who the insurance companies give the money to this third party. The third party is holding that money for and on behalf of the person that the claim was paid out to. And then the hospital system actually bills this third party directly, and that third party pays for those health bills, those medical bills, on behalf of that individual. So obviously that's an escrow account arrangement. Oftentimes in these categories, you'll see that there's some pretty complex interest splitting requirements as well, where a portion of the interest goes to the claimant, a portion of the interest stays with the third party. We've also run into instances that if you could imagine, some pretty large volumes of transactions. So one of these companies that we work with actually has a nice software system that they run internally and have APIs built. And so our client, of course, is the bank, and then this is the bank's commercial customer. That we worked with the bank and then retrospectively through them to the commercial customer to actually set up direct API connections to the bank's ZScrow platform with the commercial customer's software platform, because within the software platform, they actually had all the data that we needed to be able to manage these escrow accounts. That included opening them, ensuring we had all the compliance documentation, transferring funds in and out, closing them, taking care of all the interest, et cetera. So a lot of opportunities to be able to manage these types of accounts. The other thing that was really important in this particular use case is they wanted to make sure that all of the individual escrow accounts are insured from an FDIC perspective up to the $250,000 amount, which we're able to do through the ZScrow platform as long as those beneficiaries are clearly named. So as I went through those stories, I hope that helped to bring to life those two broad use cases that we talked about. The first one, of course, being the three-party accounts. The second one being the sub-ledger accounts. There's a lot more use cases. I could sit here for another hour and just continue to provide other examples of how other commercial clients use it. But again, this is the idea here is to open up the opportunity for you all to be thinking. There's trillions of dollars in the U.S. economy that are being managed extremely poorly at very, very few banks within the United States. And there's a huge opportunity for you all to grow your specialty deposit business in this area. We launched the ZScrow platform in the summer of 2021. So between the summer of 2021 and the end of 2021, you can see the here we had $3 million on the platform. That was, of course, by design, because as you build out a new platform, you want to make sure to put it through its paces before you start putting on more deposits and use cases. But as we opened up in 2022 to really go after the market, you could see the growth really speaks for itself. This estimate for Q2, we're actually beyond 750. We're over $800 million in deposits on the platform as of just a few days ago, and continue to see some great growth. I know previously I shared a quick story about Encore Bank, and they've been a fabulous client, and had the chance to just speak to Giovanni not too long ago, and he shared this particular quote, which we thought we would share with all of you. As I mentioned, we do work with 66 banks across the United States. I believe we're in 19 different states from a headquarters perspective, and we would love to continue to help more financial institutions within the United States grow a diverse deposit base in the commercial area, and then build out the relationships from there by offering escrow and sub-accounting solutions. As far as my prepared remarks go, that is what we have prepared for you. I would love to take an opportunity to answer any questions that some of you might have had as we went through that presentation. Feel free to provide any of those questions in the chat. We have that up and running, and would be happy to address any that come our way. All right, just waiting to see if there are some questions. One that does come across quite often is in regards to how long does it take to get this up and running. So from that perspective, we do part of the implementation is hooking the ZScrow platform up to your core system. Up to this point, we've worked with all of the major core companies and most of the various different flavors of those cores with each of the different companies. Typically, it's about 90 to 120 days to get the platform up and running. It's usually pretty straightforward. All right. Now, just to wrap up, if you all are typing any questions or you're thinking about questions to ask, we will have a little bit more time, but I did want to end with just a brief demo of the platform so you could actually see it come to life with some of the use cases that we talked about. And Margie, that's a great timed question. Can you tell us if there's a client-facing portal or platform? I'll show you right now exactly what it looks like, and the answer is yes. So Focus Federal Bank is our demo bank. We're actually on a live production environment here, just with our demo bank, Focus Federal Bank. So this is a web-based application that is available on any web browser. We have built it to be both responsive and adaptive, which means that whether you pull it up on your desktop or your mobile device, it'll automatically reconfigure to ensure that there is a great user experience for whoever uses it. It is hosted in AWS, and then there's 3 levels of access. So the first level of access that you're looking at here is on the bank side. So those of you at the bank are able to log into the ZScrow platform. You're able to service and help out any of your commercial customers through this platform, as well as doing a bunch of other things. The second level of access is going to be the commercial customers themselves. So as an example, we have Bishop, Blaine, and Braxton. They're a law firm. They have $5.9 million across 49 different sub-accounts. they have the ability to log in and take any actions necessary to manage their accounts. It's a full self-service platform. The third level of access ties to that beneficiary. It is limited as well as it's optional. So the interaction with the beneficiary with the platform might be as small as filling out a W-9 or W-8 form electronically, or it could be as much as being able to log in and having read-only access to the balances and any of the documentation that's available on the system. Within those first two levels of access, we do have the ability to do single sign-on. So we can hook up to the bank's, Active Directory or Azure or Okta or something else if you would so choose. We don't need to do single sign-on, but we can if that's the case. And then we also have the ability to do a single sign-on with your digital banking platform as well, so that when Bishop Blaine and Braxton or Tennessee Titans management logs in to your digital banking platform on the commercial side, they're able to hit a button, get to the ZEscrow platform to be able to manage their sub-accounts and escrow accounts on the fly. Jumping into a specific example here, and I'll go into a use case that we didn't talk about, which be on the law firm side, just to give you another flavor here. John Smith and Sons Law Group, they have $89,000 across all their sub accounts. You can see all the transactions going in and out. They're able to pull any of the documents, specifically in this case, their statements, right from the portal. They also do have the ability to pull reports and download them into a CSV file based off of different date ranges, et cetera. And then it's here where they're actually able to manage and view all of their different escrow and sub accounts. So you'll see multiple different folders that are set up for different use cases. So let's say that this law firm is acting as a qualified intermediary for 1031 exchanges. Maybe they have another one for their trust accounts. Maybe they have another one for their real estate transactions. Maybe they have another one for retainers. Each of these use cases are very different, as well as the rules governing each of these are a little bit different as well. They're able to manage all of these within a singular platform. When they want to add additional folders, they can just hit buttons, add those folders as they see fit. You can also create subfolders underneath there so they can have multiple levels of the data hierarchy. And that data hierarchy does persist through both the statements as well as all of the reporting. So that's cool. They're able to get all this information and see it and pull information. But what can they do? Well, let's say they do have a new 1031 exchange they need to create. They can create new sub account, and again, they can self-serve. The name of the account could be whatever the commercial customer wants. Maybe they have some sort of internal ID that they want to pull it to. Maybe they want to put just the person's name that they're doing the exchange for. Whatever it is, they have the ability to fill that out. Then we need to determine what type of beneficiary there is. No beneficiary, or is the entity an individual or business? In this case, John Smith is an individual. Since it is a 1031 exchange, a portion of the interest is going to go to the individual. Therefore, we need to make sure to get a W-9. That's why we're asking what their citizenship status is, because if it wasn't United States, then we'd get a W-8. And go ahead and drop it into the appropriate folder. Then ask, okay, what do we need to actually open up the account? You'll see here, as I mentioned, since at least a portion of the interest is going to go to the beneficiary, we're going to need to get a W-9. We can either create a DocuSign. So again, in this case, the law firm, John Smith and Sons, they would type in the beneficiary name and email address. The system would automatically generate via DocuSign an email as well as an electronic document for them to sign. Once the beneficiary fills it out, a PDF of that document is automatically ported back to the system along with all of the data. So there's nothing more that the law firm would have to do. Now, it's really cool that we have the ability to do that. We still will run into some commercial clients who'll say, I have my process. I don't want to use this electronic means. That's okay too. Maybe they get the W-9 as they fill out the exchange agreement. So they could just pull the information directly from that exchange agreement and fill it out from a manual perspective. So we just do a manual upload. They would type in the information here. The next screen is they could actually upload the document. If they don't have it, they can always come back and finish later. This is the sub account view. From here, as you can see, this isn't a pending status because we haven't yet completed the account documentation from a W-9 perspective. However, once that's filled out, it'll move from pending to active. At that point, they can close sub-accounts. They can transfer funds in and out of those sub-accounts. They could upload documents that are associated with the sub-account. So in the case of 1031s, that could be the exchange agreement. In the case of security deposits, it could be like an itemized deduction form when they close the account. For the law firm, if it was like a trust account or an estate account where they're holding money, but they have specific instructions on what to do before they release the money, they could upload that document. A lot of different use cases there for the document upload feature. As we show all of this, all of the actions that they could take from the platform itself by using the user experience, I think it's important to note that our platform is 100% API enabled. So though the majority of our users currently right now are using the user interface to be able to manage their accounts, we actually don't care how we get the data. It could be through the user interface. It could be through bulk actions. It could be through direct API integrations. So let's say, for example, and I'll just go to another use case. Let's pick on a property manager here. Let's say you have a property manager that is using this platform to manage their security deposit accounts. They have them organized by their different buildings, and then within those buildings, they can have those specific security deposits. Let's say that Second Rosedale Realty Corp buys a new property, has 200 doors. You better believe they don't want to come in and click this new sub-account button 200 times, right? So we do have the ability to, through you, of course, through the bank, to work with this property manager, get all the data we need in an Excel spreadsheet or a CSV file, and do a bulk action to upload all of those documents directly into the platform. And then from there, they could use the UX to manage from that perspective. So we could do it a one-time thing. We could do it multiple times. We could do it continuously. Or, as I mentioned before, we could do it completely via APIs where we connect directly to the software of your commercial customer that provides all the data necessary to manage those accounts, to do it in a 100% headless fashion. As we look at all of the different use cases, I shared 5 different industries, different stories. I then showed also a law firm and talked through a couple of the use cases there. And we dove into some of the complexity of how these are dealt with from a legislative perspective. I want to show you briefly how it is that we can manage all those types of things. So I came back to the bank's view of this, Focus Federal Bank, and I went to settings, and you'll see the first tab is sub-account configurations. What we're able to do is we're able to build templates, and then these templates define what the rules are that the sub-account follows. These templates can be applied to a whole swath of clients. So for example, pick a state, Florida, all security deposits in Florida are going to be treated in this particular way. We can have a Florida tenant security deposit template that could then be applied to all property managers in Florida, right? It could be applied to a specific client because a specific client has specific rules that they're following, but any sub-account will follow those templates. In other cases, we can apply a template all the way down to the sub-account level, because in some cases, you are going to have different rules for the various different sub-accounts. Either way, the types of things we can do within these templates, let's dive into interest first, because this is oftentimes the most complex one that comes up. Is it an interest-bearing account or a non-interest-bearing account? If it is an interest-bearing account, what is the rate for those deposits? We do have the ability to add tiers. Most of you would be familiar with the balance tiers, right? So we can add different rates based off of balances, but we've also run into some use cases where the rules that govern this, the escrow account actually changes based off of how long the escrow account's been opened. So we have that as an option too from a tier perspective. But then the next question is going to be, okay, so it's a 2% rate on these deposits, then who actually gets the benefit of that 2%? Is it the beneficiary, like in the case of Massachusetts for security deposits, where all of it goes to the tenant? Is it the organization, like in the case of a municipality using a subledger account, where those funds do belong to the entity of the municipality, so all of the interest earned will go to them? Will it be split, like in the case of a 1031 exchange, where a portion goes to the person doing the exchange and a portion goes to the accommodator? Does it go to another party, like in the case of an IOTA, or IOLTA account? And then if it is split, then in some cases, when it's split, the organization keeps a portion of it as interest. In other cases, they keep a portion of it as a fee. So it's a non-interest event. This determines what we do for our 1099 INT reporting, which is part of the platform. And then the split itself, how do we calculate it? Is a 75-25 split, 50-50, whatever it might be. A couple other examples of things that we could put within the templates are going to be like notifications that need to be sent out, like, for example, an account opening notification, automated distribution and periodic basis of interest, statements. A bank, you only have to provide statements to the trustee, not the beneficiary, but that trustee might need to provide statements to the beneficiary, so we can enable that within the platform. So a lot of different examples of what we could do within those templates to be able to ensure that the use cases that you either have or might have in the future, we'd be able to fulfill those particular requests. So as far as the demo goes, that's what I wanted to go through there. As I went through the demo, hope that I was able to answer some of your questions, Margie. I think I was able to show you the client-facing platform side through that demo. If anyone else has any questions, I'm happy to stay here on the line. You can see my contact information as well as our website to be able to find out more on how we might be able to help you grow specialty deposits specifically within the commercial escrow and sub-accounting space.
Thanks, Nathan. You did a great job.
Oh, thanks, Catherine.
You're welcome.
Thanks, Ryan.
Yeah, absolutely happy to answer any questions. Like I said, you all will get a recording of this webinar right after the webinar ends. That'll come through automatically. And if you have any problems with that recording, please feel free to reach out to us. And we're happy to get you more information. We do have additional information on our website about the products and about some of the different verticals. So that could be helpful as well. Well, great. Well, I'm not seeing any questions come through. Of course, like Nathan said, we're happy to answer them afterwards as well. So this is the official end of the webinar. Nathan will stay on for just a couple of minutes, probably until about 2:50, in order to answer any other questions. But otherwise, thank you so much for coming and have a great rest of your weekend or week. I got excited.
Almost weekend. We're only a day away, Catherine. We're only a day away. Some of us will especially enjoy the weekend because we have a free sauna outside.
Oh my gosh. If you aren't in Texas, it is very, very hot here right now.
Yeah, both Catherine and I happen to live in Austin. Triple digit days pretty much every day of the week, and plenty of humidity. Yeah. Just for fun yesterday, I went up into my attic just to see how hot it was.
Do you have a temperature gauge up there?
I don't. I should have taken one up for sure.
No. It is unbelievable.
I agree with you, Margie.
So true.
One of those things that ignorance is probably better.
Yeah, right.
I've lived in Texas most of my life, and I never paid attention to the feels like temperature. But when we spun out ZSuite from the bank up in Boston, my family and I lived up there for the first 2 years, and everyone always talked about the feels like temperature, like especially during the winter. And now I know why I never paid attention to it in Texas, because it's just depressing.
Yeah, mine definitely said feels like 139 yesterday.
Yep. Yeah. I think we're probably thinking about the exact same day.
Yeah. Cool.
All right.
That's a great question.
So Ryan, we do have some banks that are holding deposits for political campaign and finance verticals. I actually don't know much about them. It's not one that I have done a demo for. It was a bank that had been banking them previously, and when they started using our platform, they converted over. So I wouldn't say that I'm super knowledgeable on that particular vertical and or what rules exist for it, but I do know at least some of them is being used by some. But one of my favorite things about the platform is pretty much every week we hear new use cases, some that we didn't even expect. One of my favorite ones that came out of nowhere was, did you know that when you privately charter a flight, you have to open up an escrow account for that charter, that money needs to be passed into the account prior to the charter to be fulfilled, and then afterwards it's released. I didn't know that. It's called aviation escrow, and that's like a whole thing. Like, that's pretty cool. We've also run into various use cases of fractional ownership of commercial real estate. We're currently working on a use case on syndicating a participation of institutional lending, um, being able to use a mixture of both institutional investors along with retail investors, and keeping track of the funds, kind of going back and forth through that participation. Another one that someone started using recently is the bank had an internal GL that they use for some of their construction lending. And they wanted to increase the ability of tracking those funds in that GL, because the reconciliation processes they were doing in-house was a huge manual nightmare. And so they're using our platform to actually do those reconciliations and take that GL and those subledger account idea to kind of break it apart. So we're always running into new use cases and love hearing them and learning more about what are the requirements and how we can help with the platform to fulfill those requirements.
Absolutely. Cool. Well, I think it's time for us to go, Nathan. Thanks so much again for presenting. Thanks everybody for joining. Talk to you later. Bye.